It's Monday, the 26th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. New South Wales is heading for an extended stay in lockdown, but South Australia and perhaps Victoria to loosen restrictions tomorrow. That's our main story. Also coming up in today's podcast, Wall Street hits a record high as 90% of companies beat forecasts this earnings season. Crown Casino could be given 18 months to get the house in order. And cattle prices hit their highest level on record. Then stay listening for my chat to CMC Markets' Cindy Leung about investing overseas. But first, here's a brief look at markets. Wall Street hit a record high on the weekend thanks to stronger than expected profits and robust economic data. The S&P 500 closed 1% higher, the Dow Jones Industrial Average was 0.7% better, and the Nasdaq finished up 1%. Figures over the weekend showed that the US manufacturing sector might be accelerating faster than forecast, but the big driver was earnings. Both Twitter and Snap, the parent company of Snapchat, surged after reporting results that beat Wall Street forecasts. With around 1/4 of companies already having reported June quarter results, 90% have beaten expectations. European markets were higher, with London's FTSE up 0.9%, and the Stoxx Europe 600 1.1% higher. The S&P ASX 200 finished at a second successive record on Friday, up 0.1% to 7,394 points. For the full week, the market was up 0.6%, despite big falls early on. The healthcare stocks were the best performers last week, while several of the battery metals companies did well too. Oil prices were up slightly over the weekend. Gold prices were down a touch, and the Aussie dollar is trading at 73.6 US cents. And there's good news for all you cryptocurrency fans. Bitcoin was heading towards $35,000 US a unit last night after Tesla boss Elon Musk said he wanted the digital unit to succeed, and his SpaceX Inc. owned some of it. Victoria and South Australia are set to emerge from full lockdown tomorrow, but New South Wales is set for a long stint under restrictions after a weekend of new cases and protests across the country. The death toll from the current outbreak in New South Wales rose to 8 yesterday after 2 deaths, including a woman in her 30s. She was the youngest woman to die in Australia from COVID-19. There were more than 300 new cases in the state over the weekend, and more than 30% of them were in the community while infectious. Premier Gladys Berejiklian said New South Wales couldn't consider reopening until more people were vaccinated, although Prime Minister Scott Morrison played down the relationship between lockdowns and vaccinations. Mr Morrison said New South Wales will receive an extra 90,000 doses a week of the Pfizer vaccine. It's already receiving about 150,000 doses. The federal government also provided a new recommendation that all adult Australians consider getting the AstraZeneca jab. New South Wales is trying to push out the gap between jabs so more people can get at least one shot of the 2-shot vaccine. The Sydney lockdown is due to end in a week, though it's likely there'll only be a small easing of restrictions, if any at all. There's speculation that the construction sector will be allowed to go back to work, but what happens in the next few days is critical. The Australian newspaper this morning is reporting that the state government has requested financial modelling for a lockdown of Greater Sydney extending until mid-September. There are 11 new cases of COVID in Victoria, all linked to existing cases, and all of which were in quarantine. The major concern was a case announced last night of an individual who lived in an apartment complex. There were 2 new cases in South Australia, both whom had been in quarantine. Premier Stephen Marshall said his main priority was to get children back to school on Wednesday and businesses reopened. All the premiers were angry about protests in their cities over the weekend, the biggest of which was in Sydney. Victorian Premier Daniel Andrews called them self-indulgent, selfish and wrong, while New South Wales Ms Berejiklian and the Prime Minister said the scenes were disgusting. In a moment, the rest of the news you need to know this morning. In overseas news, the group of 20 nations' environmental leaders met over the weekend, and China, India and Russia pushed against more aggressive wording on global warming targets. All are big emitters, and also developing economies whose energy needs are growing. The group is working on a communique ahead of a meeting of world leaders in Scotland in November. China and India disagreed with the other nations on the pledge to phase out coal-fired power stations and limiting the increase in global warming. There were major protests, not just in Sydney and Melbourne, but around the world over the weekend to rally against COVID-19 measures and government sanctions. Across France, Italy and Greece, there were hundreds of thousands of protesters, and there were tens of thousands in Brazil. The person in Sydney who punched the police horse wins the gold medal, of course, for the most stupid protester, and that's saying something. And this week, the United States and China are due to hold their first high-level talks since March. It could be frosty, but at least they're talking. The US plans to bring up human rights abuses in Hong Kong, but wants to reassure Beijing that it's not building an anti-China coalition. Both sides have put climate change on the agenda. On to local news. The Star Group dumped its merger deal for Crown Resorts on Friday. The deal priced the Melbourne-based group at $12.50 a share, which was a touch high given it was a merger, and Crown's share price is currently around $10, having fallen more than 2% on Friday. The Star has walked away because of the uncertainty around the West Australian and Victorian Royal Commissions. Adverse findings could trigger a slump in the share price of Crown, and it's better to sit back and see what happens. But don't be surprised if once the inquiries end, there's more discussions between the two. Meanwhile, the council assisting Victoria's Royal Commission has suggested the cancellation of Crown's licence could be deferred for up to 18 months to give the gaming group the opportunity to mend its ways. It would minimise the impact on shareholders and 12,000 staff if a deferral was given, according to closing submissions. And if the gaming regulator doesn't cancel its licence after Commissioner Ray Finkelstein's inquiry, then a monitor should be appointed to oversee the company's cultural transformation, council said. Insurer IAG has forecast a net loss of $427 million for the 2021 financial year. That's against a $435 million profit the previous year. Chief Executive Nick Hawkins said the core business was okay, but there are a number of frustrating problems to deal with, including more people lodging injury claims, large staff underpayments, and a run of customer refund problems. National Australia Bank, the biggest lender to small businesses, said last week there was a 40% jump in calls from customers impacted by COVID restrictions and the movement of workers in Sydney. Many customers were finding the latest lockdown particularly difficult because things had looked to be improving. Cattle prices have hit a record high and are more than double the price of 2 years ago. The benchmark is the Eastern Young Cattle Indicator, and it's breached $10 a kilogram for the first time. The challenge for local producers is to have enough supply. Herds were downsized during the drought that broke a couple of years ago, but that's hardly time for farmers to fully restock. Last financial year, frozen and chilled beef exports were down 25% from the previous year. According to a report in the Financial Review, most analysts expect prices to come off somewhat, but no one's real sure. It does mean more expensive beef in the supermarket. The boss of the world's biggest multinational gold miner, Newmont, said Australia was paying the price for its slow vaccination rollout, and production costs would jump because it was hard to find workers, particularly staff with much-needed skills. Tom Palmer said Newmont was expecting cost increases of up to 5% for materials, energy and labour, with its mines in Western Australia and Northern Territory hit hard. The Prudential Regulator has asked insurance companies to have a look at their risk management frameworks, given the recent furore over how business interruption insurance covered the COVID outbreak. The Australian Prudential Regulation Authority is concerned that wording in policies has not kept up to date with changing legislation, and COVID has exposed some of the shortcomings. Earlier this month, QBE and Lloyd's of London were hit with a class action lawsuit. It came after the High Court rejected the insurance industry's bid to quash business interruption claims due to COVID. Afterpay will launch its Afterpay Money product in Australia in October. The app includes a digital wallet and a physical card for customers to use to deposit salaries. The savings account will offer a competitive 1% annual interest rate. Afterpay has gained an Australian financial services licence to provide general financial product advice, basic deposit products and debit cards. The Buy Now Pay Later group has done a deal with Westpac, which will white label the service. So, while other players are shifting into the Buy Now Pay Later space, Afterpay is moving into more traditional banking products. The group is hoping Afterpay Money will increase loyalty and attract a new range of customers. One of the biggest selling points in recent times about sustainable investing was that returns at least matched other options. People could invest and make money while also helping the environment and community. Figures from research house Super Ratings released last week have cast doubt on that. Super Ratings said the average annual return of a median sustainable balanced option was 8.3% over the past 5 years, which was below the 8.7% delivered by the typical balanced option. Hester had the top-performing sustainable growth fund, which delivered annual returns of 11.8% to members. And finally, anyone else amazed at the coverage of the Olympic Games? The 7plus channels allow streaming of numerous different events, and while not perfect, it's very comprehensive. Saturday delivered the biggest day of live streaming in Australian television history, 172 million minutes, about twice as much as the previous record. Clearly, Seven's coverage is benefiting from the lockdowns. Up next is our daily interview. Today I'm talking to Cindy Leung from trading platform CMC Markets about investing overseas. In particular, we're looking at the volatility and opportunities in the US, Europe and Asia. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Then, after that, you'll find my weekly episode of The Week Ahead with economist Stephen Koukoulas. We've got all this week's economic news covered, and I get Stephen's take on whether we're heading for a double-dip recession. And if you missed it, yesterday I spoke to David Robertson, Head of Economic and Markets Research at Bendigo Bank. We talked about some of the findings of Treasury's recent intergenerational report, which tries to look 40 years into the future and model the trends that could hit the economy. Everything from population growth and the role of immigration to superannuation, the pension and the changing attitude to debt. So, plenty of good listening to get you set up for the week. It's Monday, the 26th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.